There is broad weakness in activity, including consumption, capex, and production, manufacturing production. The weaker consumption is not surprising given elevated interest rate and the fiscal contraction, and the slowdown in credit growth, which all affect consumption. The weakness in manufacturing was a bit of a surprise, and we think that about 2/3 of that decline in manufacturing activity is coming from adjustment in production of semiconductor, which has something to do with the inventory correction. So we think that's more or less one-off rather than a new trend, given strength of the semiconductor demand, especially for AI.
And we just got the base rate, keeping things at 3.5% once again. So really in line with market expectations. This is the 7th consecutive meeting the BOK is holding things at this level. And what about that rate cut? You just mentioned the broader weakness here. The market expectation for the Fed's rate cut is building up here. When do you see in 2024 the BOK cutting rates?
Yeah, our baseline view about the Bank of Korea cutting the rate is a bit faster than market think. We expect a cut starting in Q2 because of a combination of this inflation trend and the weak domestic demand plus export recovery. The export recovery is important because if you have a weakness both in consumption, domestic demand, and export or external demand, then even if you want to cut the rate, you have to pay attention to U.S. inflation, U.S. monetary policy, and rate differentials and associated Korean won weakness. But if your export is stronger, then you worry less about the external side, balance of payment. Then you can focus more on domestic demand weakness, domestic inflation, not U.S. inflation, and less constrained by U.S. monetary policy. So that's why we expect the Bank of Korea to cut in Q2 possibly ahead of the Fed and ahead of many other central banks in Asia.